I like how you mentioned that value investors can sometimes be too early. That's kind of a very euphemistic way of putting it. I think I personally feel like I've been too early on a lot of securities recently. So.
Yeah, well, if you're really too early, it's sort of indistinguishable from being wrong.
Yeah.
So some people call it a value trap. What it is it's just a mistake. It's just a bad investment. So yeah, and those come up and sting everyone from Warren Buffett to everyone across the board. So there are value traps out there. There's positions and holdings that never really re-rate. I think one of the biggest, sorry to go on a little quick tangent, but I think one of the biggest challenges that a lot of maybe, I don't want to say retail investors, but a lot of investors face this challenge. Even professional investors actually face this challenge. And it's that they're, I think, very focused, and it's the right way of thinking, but they're very focused on sort of the Benjamin Graham analysis. So they want to buy into these very cheap, inexpensive securities. But if you're looking at simple metrics like EV to EBITDA and PE ratios and things of that nature, the ones that look the cheapest are the ones that are not growing or maybe dying. And so you get this tendency for value folks to pile into companies that are going out of business. And if it never re-rates, eventually the value just declines to the current market price, and then you end up exiting and you sort of blame it on some value trap. But the fact is that the business wasn't a good business. And so it's very helpful, I think, to focus on like the Fisher style of investing, which is sort of buying in at a cheap or even reasonable price, but making sure that the business is a great firm and that the business is growing. And that's very much how value investors think. But there's a lot of value investors who get trapped in what some people call the melting ice cubes. And these businesses are headed down. Warren Buffett used to call them the cigar butt businesses. But if they don't re-rate before you get that last puff, now you're stuck with a flat or even negative holding that you're probably going to have to exit because the business is dying.
Well said. And I definitely have seen my share of those personally, and have hopefully picked up some good lessons learned